Hello students and welcome back to bankexamstudy.com. My name is Ramandeep Singh and today we are going to do an important session for the RBI Grade B exam. Student, this particular session is important for the phase 1 as well as for the phase 2. But before starting, let me tell you about the RBI Grade B crash course in which we are providing the complete video classes, descriptive paper evaluation service, it's part of it, detailed notes, descriptive model answers for the ESI, finance and the management, monthly RBI Grade B GK Digest compilation, coverage of the RBI circulars, current affairs, government schemes. Everything is part of the course and link to this course is available in the description. You can check the description and in case of any doubt, you can drop me a WhatsApp message. This is my personal WhatsApp number. So let's start the session with the Sukanya Smrithi Yojna. I hope you are already aware of it. The Sukanya Smrithi Yojna, I am already, I kept some space here, so that is it. So, Sukanya Smrithi Yojna, I hope you are aware of this scheme already, but there are certain points that a lot of you actually, forgot to remember. Okay. So we know that the Sukanya Smrithi Yojna, it was launched as a, saving scheme for the girl child below the age of 10 years. So first of all, you are supposed to remember that only a natural or the legal guardian can open an account, the savings, the Sukanya Smriddhi account for the girl child, not the boy child. Okay. So that is important. Who can open? The eligibility criteria, the natural or the legal guardian can open and should be for a girl child and who's below the age of 10 years. So that is an important concept. The eligibility wala concept is important. Okay. Please remember that. And only one account can be opened. You cannot have multiple accounts for the same girl child. That is another important point. And if the natural or the legal guardian, he has more than two girl childs, there are 3 or 4 girl childs, this Sukanya Smriddhi account can be opened only for 2 girl childs. Okay, that is important. So certain features are there. All these pointers are important for the eligibility criteria. Okay, then certain features are there authorized by Ministry of Finance. It is a government of India backed savings scheme. So it is a government of India backed savings scheme similar to PPF. In case the bank goes bankrupt, the government of India is backing this particular scheme. Okay. Even if the bank goes bankrupt, it is a secured scheme. The government of India is going to pay back your money. Okay. Attractive rate of interest is there. You are going to get 7.6%. Please check it. I hope recently they have decreased the rate. I hope it is still 7.6%, much higher than the FD rates, and it is fully exempt from tax under section 80C. So you get the exemption under section 80C. Minimum investment is 250 rupee in a financial year, maximum 1,50,000 in one financial year, and minimum amount of rupees, if that is not deposited in a year, rupees 50 penalty would be levied. So what is important here? So please check. I'll update that. The first of all, the eligibility criteria is most important, right? For the girl child whose age is below 10 years, maximum 2 child who can open, and maximum 1 account per girl child can be opened by the natural or the legal guardian. Okay. And it is exempted under section 80C. It is backed by the government of India, similar to PPF. Even if the bank goes bankrupt, it is secured by the government of India. Okay. So important, the minimum investment and the penalties are there. Okay. So if there is any doubt in your mind, always ask your doubts and I'm going to answer your doubts. Okay. So SO marketing ka cutoff. I'll make a video tomorrow regarding the SO marketing ka cutoff. Okay. Abhi marks out hue hain. I'll discuss that tomorrow morning. Okay. Let me do this class. I was busy with this class when the result came out. Triple tax benefit is there. What do you mean by triple tax benefit? The principal that is invested, it is tax free. The interest earned is tax free. The maturity amount is tax free as well. When you make a deposit, it is exempted under section 80C. You get a 80C. And when it gets matured, when you get your money back, the interest and the maturity amount that you get, it is also tax free. You don't need to pay any tax under the income tax slabs or anything. Okay. So that is important. You get that is known as triple tax benefit while you're investing your money and while you are redeeming your investment. It's totally tax free. Further, you're getting tax exemptions. Very, very good scheme. When you make an FD, right, even you have to pay taxes, right, on the interest earned. So that's a benefit here, and the interest rate is less than the return from the Sukanya Samriddhi Yojna. So deposit in an account can be made till completion of 14 years from the date of opening of the account. So the deposits can be made for the 14 years. So if the age of the child is like, let's say 2 years, you can make the deposit till the age of 16. Okay. When the account shall mature on the completion of 21 years from the date of opening the account, provided that where the marriage of the account holder takes place before the completion of such period of 21 years, then in that case, the account can be matured. Okay. So the withdrawal facility, when you can actually withdraw. So once the girls gets married, you cannot continue that particular account. And when you can, withdraw money, when you can actually withdraw money to meet the financial requirement of the account holder. What are the financial requirement for higher education or for the marriage? You can withdraw the money. The account holder can avail partial withdrawal facility after attaining the age of 18. For which purpose? Higher education or marriage. If the beneficiary is married before maturity, account has to be closed. If the beneficiary got married before the maturity, the account has to be closed. Maybe you opened the account when she was like 8 years old or 9 years old and she gets married by the age of 21. She can close the account. Okay. Let's move forward. Pradhanmantri Suraksha Bhima Yojna. So please remember that Pradhanmantri Suraksha Bhima Yojna, if you know Hindi, agar aapka Hindi acha hai, you know that Suraksha Bhima, it is an accident insurance scheme, Suraksha Bhima. Okay. That offers accidental death and disability cover. So what you are supposed to know, the premium that you are paying, kitna premium aap pay kar rahe ho, how much premium you are paying, what is the eligibility criteria. That is for all these banking schemes, eligibility criteria and the benefits, how much money that you are going to get. Okay. First of all, let's check the eligibility criteria. The age between 18 to 70, it used to be 65, but now it has been extended to the 70 years with the bank account who gave consent to auto debit the the premium amount. Okay. If you have to pay the premium. Aadhaar would be primary KYC for the bank account. Okay. So eligibility is there, 18 to 70 years. Aadhaar, obviously you have the Aadhaar. How much is the premium? 11 rupees for PMSBY through offline mode, and the annual premium is rupees 12 starting from 1st July, which will be auto debited. Okay. So 12 rupee. So for online it is 11 rupee and for offline it is 12 rupee. You get the 1 rupee benefit for making, the payment for the premium online. Okay. So 11 rupee for offline, 12 rupee, 11 rupee for online and 12 rupee for offline payment of premium. The policy period, the cover shall be for 1 year, obviously it's for 1 year. And then the payment mode, that's I already told you, auto debit from your account. You can also do the offline by the offline way. And what is the risk coverage? That is important. 2 lakh rupee for accidental death and full disability, and 1 lakh rupee for the partial disability. Okay, that's important. Please remember the eligibility criteria, the age 18 to 70 years. Okay, the policy period is for 1 year. The premium 11 rupee for online, 12 for offline payment, and payment, the risk coverage is 1 lakh for partial disability and 2 lakh for the death and full death or uh, full disability. It should be or. Okay, let's move forward. So it's clear here. In case of death, 2 lakh rupees. In case of total irrecoverable loss of both eyes, or loss of use of both hand or feet, or one hand, one feet, or loss of sight of one eye, that would be the complete disability, right? So that is a definition of complete and partial disabilities. Okay. Atal Pension Yojna, that was in the news. So the eligibility criteria, age between 18 to 40, 18 to 40 years for the Atal Pension Yojana, must own a saving bank account and mobile phone number. So the guaranteed pension of rupees 1000 to 5000 after you attain the age of 60. So you get the pension after you attain the age of 60. Age limit 18 to 40 years, and pension starts at 60 years. Important. That is important. Okay. Let's move forward to Pradhanmantri Jeevan Jyoti Bhima Yojna. So available to the age group of 18 to 50 years, having bank account, who give their consent to auto debit the premium. Death cover is 2 lakh rupees only. And the premium, how much premium you have to pay? Rupees 330 per member. That is deducted from the saving bank account with the auto debit instructions. So the premium you need to remember, the eligibility you need to remember, the death benefits you need to remember. That is important. National pension scheme is actually very important. So NPS is a retirement benefit plan, right? It is a retirement benefit plan uh, introduced by the government of India, and who manages that, who monitors that? PFRDA. PFRDA is the governing body for the NPS. Okay. For example, MFI is there. For the mutual fund, for stock market, SEBI is there. So PFRDA is a regulatory institution for NPS. So for the NPS, see students, when you make an investment, PAN is there, right? Your PAN is actually used for filing your income tax. PAN is there. For national pension system, PRAN number is there. Permanent retirement account number is there. Permanent retirement account number is there. It is a unique number that is allotted to every subscriber. Okay. What is the eligibility criteria? Any Indian citizen between the age of 18 to 65 can opt for it, can opt tier 1. So there are two tiers of account, tier 1 and there is tier 2. But on this video, we are going to discuss that tier 1 because that's what the scheme is about. Tier 2 is more liberal. There are not many, tax benefits you're going to get. We are going to discuss the tier 1 here. So contribution, the minimum contribution in the tier 1 account is 500 rupees, and for the tier 2 it is 1000 rupees. Okay, the minimum contribution, the minimum investment that you need to do is 500 for the tier 1. What are the benefits? It is regulated by PFRDA, so it is transparent. Okay, it is voluntary, nobody is forcing you anything. Tax, obviously, I guess I have, yes, tax benefit we are going to discuss on the next slide. You can basically decide yourself. If you want to do, you can decide how much money from your savings should be invested in stocks and equity, and then how much in the debt. Okay, you can decide on that. There is auto mode as well. There are many AMCs who are handling many funds. Kotak is there, HDFC is there, I guess. So flexibility, you have the flexibility to select or change the POB, point of presence, investment pattern, and the fund manager. So these Kotak, HDFC, SBI is there. I guess there are 12, 13 fund managers are there. You can select your fund manager yourself, and this ensures and you can optimize, similar to the way you select your mutual fund AMCs, your which fund you have to invest. Similarly, you can invest with the fund manager, right? uh, and then it is economical. It is one of the lowest cost investment product, and you're going to get a lot of tax benefits, right? Portability is there. You didn't like the returns, the way one a fund manager is working. You said, okay, I'm gonna switch. You can switch easily. That the PRAN number is there. It makes the things easy. Okay. Superannuation fund transfer. NPS account holders can transfer their superannuation funds to their NPS account without any tax implications. Okay. Uh, Tax benefit, which is actually more important. See, under section 80C, you get 1,50,000 rupee ka tax benefit. Okay, for making investment into mutual funds. A lot of 5-year FDs there, ULIPs, life insurance, tuition fee. A lot of items are there. So, but this is over and above this 1,50,000 limit. So you get an additional benefit of 50,000. So this money, 50,000, if you are under the tax slab, 30% tax slab, so, or 20 or 30% tax slab, that much money you save, like 15,000. Okay. A lot of money you are saving here. Okay. So if you are a salaried employee, then you may invest up to 10% of your basic salary plus DA, and claim tax exemption on the invested amount under 80CCD. But if you are a self-employed, you can invest up to 20% of your gross annual income, and then you can claim the tax exemption on the invested amount under section 80CCD. So 50,000 ka benefit is there. Employer contribution is capped at 7.5 lakhs for NPS, PF and the superannuation. 7.5 lakh ka limit hai. The important point, withdrawal. So when you can actually withdraw your money. So if I start investing today in NPS, when I can withdraw the money, right? In mutual funds, ELSS, ATC wala, 3 years lock-in period is there. But here the lock-in period is really hard. If let's say I'm 32, vesting criteria, you can withdraw your money at the age of 60. 60 saal ki umar mein you can withdraw your money. Even at that point, lump sum withdrawal 60% of the corpus, and then annuitization minimum 40% of the corpus should be you should be getting that as a annuity or monthly payments you're going to get. Complete withdrawal if the corpus is below 2 lakh rupees. Okay, that's how you can withdraw your money. Maximum 60% lump sum, or you can go like, okay, I don't need lump sum. I need annuity. At the age of 60, give me my pension. So you can do that way as well. Okay. Partial withdrawal, tax-free withdrawals are there. 25% of own contribution after the lock-in period of 3 years, 3 times during entire tenure. That much you can withdraw partially. 25% of your own contribution. That's what you can withdraw partially. Okay. So students, RBI Grade B crash course. I hope you liked the today's session. You didn't get bored. I hope so. मैंने bore नहीं किया. So if there is any doubt, sir, all these are old scheme, but Shehzadi, these are important schemes. These are very, very important schemes. NPS is an important scheme. All these schemes, social security schemes, are very, very important for your exams. It's not like only the new schemes are important, but these are social security schemes. People are using them. There are certain updates in them. So it's really, really important. Okay. So I hope you like the today's session. If there is any doubt, Shehzadi, I know you are a score students. You are a paid student of the course. Within next 2 or 3 days, we are going to start the proper live classes in the course. Right now, there are certain issues. We are fixing those issues. So in the mobile app, we are going to start the proper live sessions there. Right now we are uploading the recorded ones. So you can ask your doubts on the live sessions in the course as well. So we are going to provide the full length mock test, descriptive test, evaluation would be there. So Shehzadi, you can ask your, you can submit the descriptive test on the course. I'm going to check your descriptive test. Notes would be there, monthly capsule, complete coverage of the syllabus is there, and list of us some of our this is my number, list of us some of our students who cracked the exams, similar exams in the past. I'm really happy for them. If there is any doubt in your mind, please ask your doubts, and I'm going to answer your doubts. And that's actually all for today, students. Thank you, and that's all. Thank you, and subscribe the channel. That's really important for me.